Okay, thank you. If everyone can hear me okay, I'll begin the presentation. And welcome to this educational, actually, presentation of two things you can do to immediately improve your trading. I'm going to show you how simple it is actually to get on a consistent path in your trading. And I'm going to show you two edges that you can actually start applying to your trading as early as today, as soon as we conclude today's Traders Talk online webinar series. So this is going to be really helpful to you so that you can really get on that track to being a consistent trader. For example, let me start off by showing you this chart that happened just the past month or so. Someone looking at this chart just offhand would say, well, Steve, there's no direction I can sense here. Just looking at the past 10 or 11 days that we're basically going sideways. But with the edges I'm going to share with you, you will have been able to identify an up indication here, as well as here, as well as here, sharing with you what the market is thinking it wants to do. Now you have three consecutive up indications, so that's the market telling you it wants to go higher. Now this was just roughly about a month ago in the first or second week of April, and as we can see, the stock gained 16 points in the following 2 weeks. So I'm going to show you how to identify these two edges, and once again, you can start applying them as early as today if you'd like. So this promises to be a great educational presentation, and we're going to share with you just how easy this is on a new platform. I developed this with Pro Trader Strategies. It's our PTS Primo charting platform. It's the trading educational portal that you've been searching for. So everything is just one click away using our new platform. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading, and about 8 years ago, I teamed up with Pro Trader Strategies, where all we focus on is simply educating you as a trader. We simply teach traders how to trade. Now, I've been trading for a total of 16 years, or I should say 40 years. I was on the trading floor of the Pacific Stock Exchange for 16 years, and 9 of those years I was a specialist. So that's where we get the name specialist trading. A specialist doesn't mean you are any more special than anyone else. It just means that you made markets or specialized in making roughly about 50 or 60 markets in different stocks and issues. So I made markets during the crash of 1987 and the bull market that followed. I traded through just about every environment you can think of: straight up markets, straight down markets, sideways markets. I've traded just about every system, every strategy, every technique you can think of. So in my going on 41 years now of trading experience, I know what works in terms of consistency and I know what doesn't. So that's why I teamed up with Pro Trader Strategies. We formulated specialist trading so that we could simply educate traders around the world in over 115 countries, and in virtually every state in the United States. We have members who are learning my techniques and things that I have found to show high levels of consistency in your trading. Okay, we want to put the trading back in your hands, and as you'll see in today's presentation, our goal is simply to educate you as a trader. Now, I'm going to be sharing with you these two great techniques today that you can start applying right away. But before we begin, we're required by law to first show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these techniques today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all examples I'm about to share are strictly for educational purposes only. Now, as you're taking one last look at our disclaimer here, I would also like to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there. That's an abbreviation for Specialist Trading. Every day I post different information, anywhere from little bits of financial wisdom I've accumulated along the way to actual signals that some of our strategies are generating. So lots of great free information. Feel free to follow us on Twitter. Now, as I stated in the opening statements here, we are a little bit different from other websites and companies in the fact that we are strictly an educational company. As you can see, my goal is not to sell you some $10,000 system that never fails, that's had a winning track record going back 20 years. My goal is not to tell you what the perfect market is, or my goal is not to force feed you signals and to tell you what's the perfect time frame. We don't believe in that, because that's basically telling you that you don't know what to do, and so I'm going to tell you how to trade. And that's a recipe for disaster. So my goal is to teach you how to trade with the specialist edge. Now, when I was struggling some 41 years ago, when I first started trading myself, this was the same edge that was taught to me by my mentors. These were specialists on the floor as well. So the same thing that has allowed and sustained me to trade for over 4 decades now are the same things that I teach my students. So hopefully you'll be able to trade not just 1 or 2 good months or maybe 1 or 2 good years, but 10, 20, 30, 40 years down the road. Okay? Now, having said that, since this is going to be an educational classroom, I do want to take each and every one of your questions, but if we stop at every slide for a question, we'll be here for a good 3 or 4 hours. I don't want to take the next speaker's time. So if you have a question, kindly wait till the very end of the presentation. This won't take long, and I promise I'll get to each and every one of them at the end of the webinar, okay? So let's go forward here and let's begin. All right, I'm going to share with you how simple these edges are, because simplicity is really what makes you a consistent trader. And you're going to look at this and say, this is just too simple, Steve. I mean, this is like trading 101. But remember, it is the simple things that work, not the high convoluted indicators that you know have no idea what they're based on, or the system that you have no idea how to explain, but the simple things. The traders who have been trading for a relatively short time, 5, 10 years, have these really complicated trading plans. But it's the traders who've been trading for 3, 4, 5 decades whose trading plans are extremely simple. Now, this is what my mentors taught me roughly 41 years ago. I'm teaching you the same thing. If it's worked then and it's sustained me this long a time, it's bound to continue working. So here's the first edge. If you get a buy signal, I don't care if it's one of your strategies, one of my strategies, I don't care if it's based on fundamental news or based on the full moon. That buy signal can only be entered above the 50-period simple moving average. In other words, where all the requirements are met, you must enter above the 50-period moving average, okay? Now, as we see here in this generic chart, I specifically left out what this chart was, a currency pair, a future, a stock. It really makes no difference. And I specifically left out the time frame because I don't want you to think this will only work on an hourly chart or only work on daily or weekly bars. It works on virtually any market, any time frame, any direction. So as someone would look at this, they'd say, well, Steve, there's really no direction here. We're going down, back up, back down. This is a rangy market. I've always been taught in the chat room I go to stay away from these things, okay? There's no trend taking place. This is the way traditional wisdom usually teaches us how to trade. Let me show you how simple it is to get in sync with the overall trend. All you have to do, regardless of market or time frame, is to apply a 50-period moving average. And then you ask yourself, where is price in relation to that moving average? As you can see here, price is above. So if price is above, that means that the overall trend is up. It's that simple. There's no convoluted indicators or no looking at different time frames, a higher time frame to find out what the lower time frame is. Don't overcomplicate your trading. Just add a 50-period moving average. Ask yourself where the majority of price bars are. In this case, they're above. So the overall trend is up. Now, if the overall trend is up, what does that mean? Are we going to be trying to sell into the overall trend? Are we going to try and swim upstream? No, we're going to go in sync with the overall trend. So this means we will only be buyers. Whatever strategy you're trading, only take the buy signals. Why? Because you will have higher levels of consistency when you're in sync with the overall trend. This consistency is what will allow you to trade down the road and give you that longevity. Not some method that's looking for tops and bottoms, because that'll work every once in a while, but over time, it's like, you know, gambling at the slot machines. You'll have 1 or 2 winners, but if you stay there long enough, you'll most likely lose all your money. So you will have longevity. You will have consistency if you are in sync with the overall trend. In this case, the overall trend is up, so you're only going to be a buyer. It's that simple. Now, what about the opposite side of the coin? Well, sell signals can only be entered below the 50-period moving average. So whatever your strategy is based off of, doesn't matter. If you get a sell signal, say some earnings report comes out and you think they're terrible, if it's above the 50-period moving average, it's in your best interest not to take it. Now, if it's already below the 50, go ahead, because you are in sync with the overall trend. Let me show you what I mean here. Looking at this generic chart once again, someone looking at this would say, well, Steve, you can't tell anything with this. It's going, you know, in a range. There's absolutely no trend to the market. That's not true. That's the way we're always taught, which has no levels of consistency. What my mentors taught me is the first thing you do before you even take the trade is apply a 50-period moving average. It wouldn't matter if this were a tick chart or a monthly bar. And ask yourself, where is price in relation to that 50-period moving average? Obviously, price is below. So what does that tell us? It tells us that the overall trend is down, all right? The market isn't in a sideways range. It's in an overall downtrend. So do we want to swim upstream? Do we want to buy in an overall downtrend? Do we have enough gall to think that we can find out where the bottom is? No, there's no consistency in that. Every once in a while you will pick a bottom, but overall you most likely are not going to. All right? I've been trading for 41 years now. There are some traders I know of who are able to pick tops and bottoms very consistently, but they're probably 1 or 2% of all the traders around. The rest of us, myself included, have a very difficult time doing that. So why not just be in sync with the overall trend? If the overall trend is down, you are only going to look for sell biases, okay? Sell signals. That's how simple trading can be. Remember, you don't have to overcomplicate your trading in order to be consistent. In fact, it's the opposite. If your trading is overcomplicated, more than likely, you're going to have a difficult time becoming consistent. It's the simple plans that actually have more consistency than the complicated ones. All right, let's go to the second edge now. Let's say we are above the 50-period moving average. All right, so we don't have any structure yet. We don't really know where to get in. Let's say our strategy hasn't generated a signal yet. Well, what happens all of a sudden if it does generate a signal? Should we just blindly take it? Well, here's another way to increase your odds for consistency. If your strategy generates a buy signal, these bars must close in the top 25% of their range. So what does that mean? Well, let's say, once again, it's based off some fundamental news, okay? Now, let's say the fundamental news comes out, great earnings, great report, somebody likes the stock, some brokerage house or institutions. All right, it's above the 50, so great, you're in sync with the overall trend. But if that bar where all the rules come into play, where all the requirements are met, does not close in the top quarter, you should not take the trade. Wait for the first bar that closes in the top quarter. Let me show you what I mean here. Once again, another generic bar. It would not matter if this were a tick chart or a monthly bar. It makes no difference. This can be applied to any market, any time frame. What you want to do is, once you get a buy signal, you're above the 50 and you get a buy signal, you want to divide a bar into 4 separate but equal parts. If you close in that top quarter, that is your indication to buy. That is a buyer's indication. That's an upward bias. And those are the bars you want to enter on, okay? So you want to wait till that bar closes. If it closes in the top 25, you've increased your odds for consistency even more. See how simple this is? It doesn't have to be rocket science. So let's look at that chart again. We're above the 50. And as you can see here, just looking at these aren't real strategies. It's just showing you how well this works. We closed in the top and we went up for some limited time. Now this could be monthly bars, so you don't know how big this gain is. But then we did the same thing right here. We closed in the top 25%. We're above the 50. And then this time it really kicked in. So you see how you put the odds in your favor when you're putting these two edges together. Now conversely, if you get a sell signal, if you like to go short, if you like to buy puts, you like to have some option strategy that leans towards the downside, when all the requirements are met, if you're below the 50, you don't want to just blindly enter at the market. What you want to do is wait for a bar that closes in the bottom 25% of its range. So as we look at this generic bar right here, what you want to do is simply divide by 4 separate but equal parts. If you close in that bottom quarter, that is your indication to sell. Then it's okay to enter. How many times have you entered into a trade and you're just so convinced that it's going to go straight up or straight down? You enter either through options, or you buy the stock or the currency pair or the future, and it goes the exact opposite direction, right? And you're sitting there going like, what was it waiting for me to get in to immediately change directions? Most likely, when you entered into that trade, you did not enter on a bar that closed in the top 25%, or if you're going short, you did not enter on a bar closing in the bottom 25%. So that's what you want to wait, because usually you will continue in the same direction. So if you get a buy signal and you close in the top 25%, you want to enter because that's the market telling you it wants to go higher, okay? Same thing on the sell side. Now let me show you how simple it is to apply these two techniques, okay? As we look here once again at this generic chart, once again, we're below the 50 period, so the overall trend is down. Let's say you get a sell signal right here. Well, you closed in the bottom 25%, so that's a valid sell signal. And look what happened. See how you put the odds in your favor? Had you gotten the sell signal right here, let's say, well, where did the bar close? It closed in the top 20 and kept going up. We don't want to sell on a bar that wants to go higher. Here was the first bar that closed in the bottom 25%, and look what happened. Now, sure, maybe you may not get in at the top or the bottom, but that's okay. Remember, that's a gambling mentality. We don't care about selling at the top or buying at the bottom. That will happen every once in a while, but that's not our goal. Our goal is to be in sync with the market and to get in and have the market move in our direction the minute we get in. We don't want to buy or sell something and have it go in the exact opposite direction. stop us out, and then see that later on it went in the direction we wanted to go. We want to jump on the train, and the minute we jump on the train, it goes in our desired direction. That's what we're looking for, okay? And that's what these two edges can give you. Remember, it makes no difference what market, what time frame, what direction. So I don't want you to, I'm going to show you a bunch of slides now, and they have a stock bias, but don't worry. If you're trading intraday futures, if you trade currency pairs, you trade commodities or Bitcoin, the same technique can be applied, okay? Let's show you some recent examples here. Okay, now this is the PSX example that we showed earlier. Now, what these examples are going to show is they're going to be showing you how you can apply these two edges. Now remember, these two edges can be applied to your current strategy. They can also be applied and put together a strategy that you'd like to make. Let's say you have an idea for a strategy and you like to make your own techniques and plans, you could do that. Or we'll show you right now how these two edges make up the cornerstone of one of our best strategies that we have at Specialist Trading. And all the examples you're going to see are actual buy signals generated and sell signals generated using this strategy. So once again, when we showed you this example in the very beginning, you would have looked at this and said, Steve, there's no direction. But remember, the first thing we want to do is add the buy-sell line. The buy-sell line is a 50-period moving average. And we show you how simple it is if I backtrack here. On our platform, it's right there. It's one click away. The buy-sell line is simply the 50-period moving average. It tells you whether you should be buying or selling. Once you click that on, you'll get this drop-down menu. We have different features for viewing the buy-sell line. Let's just go to the standard basic one, which is the 50-period. You click that on, and it automatically appears. Now, the beginning of this chart, the bars are below, so that means the overall trend is down. But what do we have here? We have this closing above, this closes above, and this closes above, all right? So this is interesting. We have 3 consecutive bars closing above. And guess what? Let's find out where they close exactly. So all you have to do is click on the top bottom 25%. That's our second tool that we talked about, and you would click on signal arrows, and automatically it will give you the arrows on bars that close in the top or bottom 25%. And look what happened here. We had 3 that closed in the top 25%. So these make up the 2 edges we just shared with you. Now, you can, with any platform, it doesn't matter, you can do this on your own. You can take the time to divide by 4 and make sure that they're above or below the 50-period moving average. But remember, this is all one click away on our new educational platform. So with this portal, it's all there for you in a matter of seconds. It's one click away. So right here, you would have known that you had 3 up indications. And that's how we found out that the stock was going to go higher. All right. Now, looking at this example here in OC, once again, the way we're traditionally taught is there's absolutely no way to find out what the stock wants to do. All right, there's no way. Just looking at 5 or 6 bars, there's no way anyone can see what direction it wants to go. That's the way conventional wisdom tells us how to trade. But that's not true. The first thing you want to do is click on the buy-sell line in the top left-hand corner. Just click on the most basic, which is the 50-period simple moving average. And we see here that the majority of bars are below. Even though we kind of opened up, we still closed below. So when someone tells you there's no direction, that's not true. The overall trend is down. The market wants to go lower. And someone would say, well, how can you tell that? Because price is below the 50. It's that simple, all right? Now we want to see a bar. Let's say we got a sell signal, and we got the sell signal here. Well, if you had sold right here, look what happened. Went up higher, okay? That's because these bars did not close in the bottom quarter of their range. It's as simple as clicking on top bottom 25%, clicking on signal arrow, and you would have seen here that this bar closed in the bottom 25%. So rather than go short here and then maybe you get stopped out or throw in the towel because you got worried, you would have simply waited for this bar, and look what happened. It dropped 6 points in 2 days. Now, we're not a predictive company. We're not a systematic company. There's no statistics or anything. We don't believe in that because, trust me, I've traded just about every system, every method you could think of. I've even taught systematic trading. I showed systems that went back 20 years, fantastic results, and guess what? Every one of those systems I taught blew up eventually because the market conditions changed. But these things don't change. What I'm sharing with you now were taught to me some 41 years ago. So we're trying to work with consistency, things that are in sync with the overall trend and show you the short-term trend about what the market wants to do. But they don't predict how high or how low something will go. We're just giving you edges to be in sync with what the market wants to do so you can jump on board. Now, speaking of jumping on board, we use these 2 edges to formulate one of our most consistent strategies, which is strategy number 4. So what I want to share with you is you can either add these two edges to your current trading method, and I really feel strongly they will increase your odds for success, or you can build a strategy based on them. Now, when I was on the floor, trading floor some 40 years ago, this was the first strategy that was given to me, strategy number 4, and it incorporates these two edges that I just shared with you. In fact, those are rules number 1 and rules number 2. There are a total of 5 rules in the actual strategy. I can't divulge what they are, but let me show you some examples. And you'll see in these examples right now the 2 rules that I just shared with you, either being above or below the 50 and where they closed in proportion to their top or bottom 25%. All right, we look at COP here. We see that we crossed above the 50, and just about a month ago, first week of April, a buy signal was generated. We're above the 50 and we closed in the top 25%, and the other rules of the strategy were met, but you know the first 2 rules, and the stock went up 7 points in the next two weeks, okay? It's that simple, because we're just listening to the market. We're not listening to earnings. We're not listening to someone in a chat room or trading room. We're not listening to the pundits on TV. We're listening to the most important thing you could ever listen to. That's the chart in front of you. That's where all the answers come from. All right, look at WYN, W-Y-N. Now this is a little bit more advanced because we had 1 bar close above in the top 25%. And someone would say, well, why didn't you buy? Because it doesn't meet all the rules and requirements of the strategy. Remember, we still need rules to this. We can't just buy or sell based on what I shared with you today. I've only given you 2 pieces of the puzzle. We still need to have some other rules. And if we notice in the next 2 bars, they opened higher but closed in the bottom 25%. And they both closed below the 50. So they meet the 2 requirements I shared and taught you this morning, and they also meet all the requirements in the strategy. So you could have taken your pick which one you wanted to sell here, and the stock went down 9 points coming into the middle of April. Now, here's a perfect example of how this works, and you can apply it to pullback trading, all right? We are above the 50-period moving average right here. We pull back to the 50-period buy-sell line. We have a bar closing in the top, another bar closing in the top, and the stock goes up 10 points, VRSN. As we're pulling back, look at all the bars. They're all closing in the middle to bottom of their range until right here. This closes above the 50 and in the top 25% of its range, and it met all of the other requirements. Guess what? Another 10 points. Now, did we look at the earnings? Did we look at the announcements? Did we look at the market conditions? Absolutely not. We just listen to the market. The market gives us and generates these signals for us. Now, this can also work to the downside, letter D. Someone looking at this chart would say, gosh, Steve, I lost so much money buying this stock. The trading room I went to, they loved it. They said all the institutions were buying, and as they kept going lower, they said the institutions keep buying it, and well, guess how well that worked out, okay? This is why we don't follow anything other than the chart in front of us. What was price telling us? Well, as far back as the beginning of the year, it's telling us that price is below the 50. So you don't want to be a buyer of this stock. I don't care what the projected earnings are. I don't care what's going on fundamentally, politically. If we're below the 50, you're only looking for sell setups. That's it. Regardless of what strategy you're trading, you're going to get the odds in your favor. And then all these sell setups were generated by bars closing in the bottom 25%. So these are the 2 rules I just shared with you. Had you taken these very first 2 setups, that had 17 points potentially you could have captured to the downside coming into the end of April. Now this can work to the upside as well. All along the way as we're going higher, if you would have tried selling or shorting into the stock, you would have lost a lot of money. But if you simply follow the rule of being above the 50 and then looking for bars that close in the top 25% of their range, you would have had added consistency to the upside. I was in HRS. As we look at letter W, here's a perfect example of the way most traders would trade, okay? Let's say they follow some master system that they spent $5,000 or $10,000 for, or let's say they want to know what the volume is or the support and resistance, and they see that this is going higher. Maybe the institutions are buying it, so they decide, you know what, we broke out of this major resistance. I'm going to buy somewhere around here. And you have a nice couple of weeks or maybe a week of it going to the upside. And then look what happens. We have a sell signal. Now, if you were following traditional wisdom, you would have said, well, why would I sell? We're going to keep going higher and higher. But if you're following what my mentors taught me 41 years ago, you would never have bought anything. You would have waited for a bar that closed in the bottom quarter of its range. Why? Because we've been below the 50 the entire time. So many times you'll see some very nice bounces below the 50. Don't worry. You should be looking at these as opportunities to go short. So our strategy number 4, using these 2 components I taught you today, generated a sell signal. Now, had you bought right here, you would most likely still been holding on. But we, knowing that we only listen to one thing, which is the chart in front of us, got short right here. And 23 points to the downside. Most likely you would have given back all of your gains and then lost some, hoping for it to bounce back higher. This is why we say there is no consistency in swimming upstream. Sure, every once in a while it will work, but over time you'll have better odds. You will have more consistency in your trading if you trade in sync with the overall trend, the 50-period moving average. Then you simply look for what the market's telling you on a short-term basis, which is closing in the bottom or top 25% of its range. Now let's look at BIIB, the same thing. We are well below the 50. So most people would say, well, Steve, this is a major support. You look at how we've 1, 2, 3 times we've held here. You've got to buy this, right? This is where all the buyers are coming in. Say, we don't buy below the 50. That'll work every once in a while, but over time, it's better. It's going to favor your odds of being a consistent trader if you're in sync with the overall trend. So our strategy generated 2 sell signals based off of these particular techniques, and 34 points coming into the mid portion of April to the downside you could have captured. Okay, Netflix. This was at the beginning of last month. We see here that the market is coming lower. People are thinking, oh, this terrible news. We got to get out of this stock. Look at all the bars that close in the bottom 25%. You're right. But where are we in relation to the 50 period? We are above. So we're only looking for buy setups, okay? Now there are a lot of bars, bar here, that close in the top 25%, but they don't meet the rules of the strategy. But this one did. We close in the top 25 and we close above the 50. And in the next couple of weeks coming into the end of April, Netflix went up 40 points, okay? Regardless of what was going on in the news, regardless of where the pressure was. Now, we can also apply this as a market directional tool. A lot of traders that we have, students of ours around the world, actually like to apply this to indices or to ETFs to find out what the overall market's going to do. For example, these 2 components which I taught you today were both spotted coming into the middle to end of March in the diamonds. That's the ETF that represents the Dow Jones Industrial Average. So doesn't it, kind of point to the fact that if you got sell signals in the diamonds, most likely that means that the index, the Dow Jones, is going to go lower, right? So in the very least, you could have said, well, gosh, if there's sell signals in the diamonds, the ETF that represents the index, I don't want to be going long the market or a particular stock, I think. I mean, maybe if I'm already long, maybe I want to move my stop up a little to protect myself. Or if I was thinking about buying those calls or buying that stock, maybe I better hold off to see what happens. And it would have been a great idea because coming into April, the diamonds fell 17 points. Now, that's just the actual ETF. Now, had you looked at the actual index, that would have transferred over onto over 1,700 points on the downside. So see how this tool could have helped you at least stay out of the market, or maybe raise your stop if you were long already, or if you were thinking about getting long, to kind of wait in the sidelines before some buy setups. So you can use this as a directional tool as well. Okay, so before we go into question and answers, let's recap what we shared and taught you today. Remember, you can start using these components as early as this afternoon. If you haven't done so already while I've been speaking, I'm sure many of you have already gone back and looked at a lot of your setups and applied these 2 rules to them. Remember, the first one is, we call this our buy-sell line. This is edge number 1, and it's just the 50-period simple moving average. But we call it the buy-sell line because it simply tells you whether you should be having a buyer's bias or a seller's bias. That's it. It's not a strategy, but you ask yourself, and you may want to write this down and post it on your screen, where is price in relation to the 50-period moving average, okay? Whenever you get a signal, ask yourself, where is price in relation? If that signal is a buy signal, but it's below the 50, I would suggest not taking it. Why? Because most likely the odds are going to be against you over time that will work. You want the odds in your favor. You want consistency on your side, all right? If you get a sell signal and it's above the 50-period moving average, I would suggest not taking it. Why? Because over time, sell signals above the 50 will not work. I've been using this technique for over 40 years, and I really think it's the cornerstone which has added or sustained me to be able to trade and to be able to be in the markets for over 4 decades. because I'm consistently in sync with the overall trend. So that's edge number one. Edge number two is once you get a signal, it doesn't matter what strategy it is. It doesn't have to be one of mine. It could be one of yours that you've made up. It could be another educator. It makes no difference. But if you get a buy signal and it closes above the 50, great. But you also want all the requirements to come to play, and you can't enter until a bar closes in the top 25%. Why? Because that's the market on a shorter time frame telling you that, okay, we want to go up higher as well. Because price can still go down lower even above the 50. You saw that with some of those pullback examples. So we want to jump on the train when it's leaving the station. For example, imagine you want to go from point A to point B and you're waiting for your train to come down. Now you look down the tracks and you see there's a train coming in your direction, but it's going the opposite way of where you want to go. Do you want to jump on that train? No, because it's going in the wrong direction. But that's the way most traders trade. When they want to buy, they wait for price to come down lower and they jump on. But there's no guarantee that that price is going to stop. How many times have you bought as price is descending and it keeps going lower and lower and lower? What you want to do is look down the tracks and wait to see a train coming in your direction that is going in the same direction you want to go. That's the train you jump on board. That's what you're looking for if you get a buy signal and you close in the top 25%. That's the train you want to jump on, okay? Same thing if you're going short. Now, we just shared with you these two components. You can apply them virtually to any strategy, any method, or create your own method based off of them, and really feel strongly you will increase your odds for consistency. And as well, you can use this on any platform, but you will have to put some work into it. When I first started out, I had to do all this by hand. So we had like, we didn't have platforms or chart on an actual screen. We had to do everything by paper. We wrote our charts with pencil and graph paper. So all this was done by hand, making the 50-period moving average and then dividing by 4 to see where a bar closed. The beauty of all this is that we've made it simple for you. We've placed it onto our new platform, the PTS Primo educational charting platform. Everything is one click away. There's no hard work. We've taken the hard work out for you. So if you want to do it on one of your platforms, that's fine, but you'll have to sit and stop, especially if you're an intraday trader, and divide by 4 and make sure you're above or below the 50. With our platform, it's all right there for it. All right. So ask yourself, before you ask me questions, ask yourself, do you think these edges could have helped your trading this past year? In fact, let me give you a homework assignment. Go back and look at your last 10 or 20 trades, the ones you just completed. I can almost guarantee you that your losses, the ones you had losses in, were because you were out of sync with the 50-period moving average. I'm confident that once you go back and look at your trade, you will see how consistent these methods are, okay? So do the research, do your due diligence, and see how powerful these techniques are, okay? Now, here's our special offer we have for all the attendees today for taking time out to hear us speak at the Traders Talk live webinar here. We're gonna actually offer you our platform. We're gonna give you the PTS Primo charting platform, which teaches traders how to trade. Here's the offer we have. We're gonna give you a 30-day trial for only $7. So you're gonna be able to use the platform, all the things we went over, for 30 days. And that's 41 years of experience in trading, all yours for 30 days for only $7. I don't think you can go out and get a breakfast for less than $7 or even $8 today. But you're gonna get 30 years of trading experience, or 40 years of trading experience for 30 days for only $7. Here's what's included in this great offer. You're gonna get our enhanced buy sell line. Now, I showed you just the standard basic way of applying that, which is a 50-period moving average, but as you can see on the screen here, we have ways of coloring the back of the screen, which shows you whether you are above or below. And we have tons of tutorial videos on the actual platform, the one click away, where you can watch these tutorials and I'll explain everything on how to use the platform. We're gonna also throw in the top bottom 25% tool, which with one click away, you click on arrows and it will automatically be there. It'll show you all the bars automatically that close in the top or bottom 25%. So you can automatically know if you have a strategy, buy or sell signal, which of those bars you should be applying these to. We're gonna also throw in 2 proprietary entry techniques. These are entry techniques that, once again, I learned on the floor that you can apply to any strategy, any method, any direction, any time frame. So if you have a method that's okay, but you're having trouble fine-tuning your entries, simply click on this bar. Once again, it's one click away, and it will show you the high probability entry points, all right? Now, this comes included with over 90 of the most popular and basic technical indicators. So if you like to tinker under the hood and experiment, you can do that. But we're also throwing in an extra bonus, and this is our signal scanner. I have a kind of a pet peeve with scanners. Most of them, I've tried just about every platform, every trading educational portal you can think of, and the scanners, you know, are so difficult and so complicated in order to work out. So we purposely made sure that this was as simple as possible. Let me show you what I mean here. Let's say you want to scan for the next day's setups for top or bottom 25%. Okay, all right. You think your market's going to go higher, it's above the 50, but you want to make sure that you see all the stocks or currency pairs or futures that close in the top 25% at the end of the day. You would simply click on Scanner. You'll see this window appear. All you have to do is click Load Symbols, and we provide you with symbol lists, anywhere from ETFs, currency pairs, stocks, NASDAQ, Bitcoin, all the different ones to choose from. In fact, you can make up your own list if you like, and in a matter of seconds, they will appear right here. Then the next thing you do is click on Scan, and in less than 30 seconds, you'll see a list of green and red bars. The green bars are the corresponding stock for the next day that are showing an up indication, a bar that closed in the top 25%. The red ones are simply a down indication. So in less than a minute, you'll know all the stocks, all the currency pairs, all the forex markets, all the futures for the next day that close in the top or bottom 25%. It's that simple. For example, if you had had this tool a couple of weeks ago, you would have scanned the night of the 4th and seen that UPS was above the 50 period moving average, and it closed in the top 25% of its range on the night of May 4th, okay, just a week or so ago. If this fit in with your buy setup, you could have purchased that night. Now, you could have run the scan a couple of minutes before the close, or you could buy the next day. But either way, that would have been a great setup because the stock gained 8 points in the next week, okay? All right, this is how simple this is. We make it so simple for you so that you can put trading in your hands. You will no longer have to listen to anyone tell you what to do or how to do it. We educate you and work with you so that you can be in charge of your own trading destiny. All right, so we're getting all this, but we realize we kind of have a technical bias to all this information. So for all of you people who like to listen to fundamental news, we're also throwing in free Bloomberg TV. We've added a media page onto our platform where all you have to do once again is click on the icon and you get a separate page that shows live Bloomberg TV. So any fundamental news, any earnings you'd like to hear about, anything that's going on in the world, you will see it as if it's being reported live on Bloomberg TV. This also is included in the offer. And then lastly, this comes with personalized tech support. If for any reason you can't load up a chart or for any reason you're not sure about how to use something, contact our tech support and they will be answering and resolving your issues in a matter of moments, okay? Remember, this is all going to be yours, 30 days for only $7, okay? This is over 4 decades of information and knowledge packed in and a lot of other great features as well. So here's how to take advantage of this great offer. Contact my sister site, Pro Trader Strategies. They're the ones I developed the platform with, and they handle all the marketing and discounts. You can either email them at trading@protraderstrategies.com or call them directly at area code 310-598-6677. That link you see at the very bottom, if you want to go right up to the $7 sign-up page, that's the link that will take you there. But that's not a live link. You just simply have to copy and paste that onto your browser. I'm not sure if they're going to post that. Traders Talk Live is going to post that on their chat box, but you can just see it right here, copy it and put it on your browser. If for any reason you're having difficulty, you can copy down the phone number, and one of the trading consultants at Pro Trader Strategies would be happy to set you up with that $7 offer, okay? So I'm going to leave all this information up here, and as promised, I'll reserve the last, I think I have about 5 or 10 minutes left. I'll answer any questions that you may have. Let's see, are all these charts daily or hourly charts? James, they're different charts. With the platform, you can get anywhere from a 1-minute chart, you can get a monthly chart, a yearly chart, it makes no difference. The charts I showed on the examples were daily charts. But as I stated at the very beginning of the presentation, the 2 tools and everything we teach at Pro Trader Strategies and Specialist Trading can be applied to any market, any time frame, in any direction. So I don't want you to think that just because today's examples had a stock bias to them, that you're a currency pair trader or you're a futures trader, I guess it won't apply to you. That's not true. They apply. I intraday trade the futures, and I apply everything I just shared with you on my intraday futures trading. So it makes absolutely no difference, okay? Any time frame. Andreas is asking any specific time frame, anyone you want. In fact, the best time frame we recommend is the one that makes you feel the most comfortable. We have students saying, gosh, Steve, I love your techniques, your information, your education has helped me tremendously. And the best time frame is the hourly time frame. It worked great for me. And then someone will say, no, Steve, the best time frame are the weekly bars. That's where I get the best setups. And then someone will still come back and say, no, I love to use it on tick charts. Those are the best setups. So there is no one right or wrong market. There is no one right or wrong time frame. The one that makes you feel the most comfortable is the right market or the right time frame, okay? Remember, you're in charge of your own trading. The entire industry is based upon someone telling you what the perfect market is, someone telling you how to trade. We don't do that at Specialist Trading. We simply provide you with education that has stood the test of time, that in my 41 years of trading has shown high levels of consistency, and then we work and mentor with you so that you can make your own decisions. It's not, we're not telling you how to trade. We're not in any way telling you what the market is or time frame. That's what you should be doing, okay? Yes, we provide one-to-one coaching, but that's something you'd have to contact Pro Trader Strategies. We also have colleges as well, where we have intimate classes of anywhere from 10 to 20 or 30 people that are live classes as well, okay? Takora asks, is there a yearly subscription? Yes, after this 30-day trial, you can decide to keep it if you like. I believe it's $97 for a monthly, and they also have discounts for 6 months and yearly. So there's a lot more different levels to this as well. So I would just contact Pro Trader Strategies, okay? They have a lot of discounts, a lot of offers, and they're willing to work with you as well, okay? And maybe they can even throw in a strategy. If you decide to go for a yearly, maybe they'll throw in one of the strategies of mine. There's a lot of great ways to come on board. We're just trying to show and share with you in good faith that we want to get to know you. We want to show you that we're strictly educational, and we can't think of a better way to do that than to give you a full month to explore our platform, all the things I've accumulated, and so you can decide for yourself for only $7. You know, we're not asking a lot. We just want to get you to know us in our education. Okay. I think I'm just about to the end. Most of the questions have been answered. I just want to say thank you so much to Traders Talk Live for asking me to speak. I also want to say thank you for attending this today. There's a lot of great speakers coming up. Please remember that we're there to educate you. I've been trading for 41 years. I know what works in terms of consistency, and I know what doesn't. And I think I can really turn your trading around. So if you need help, you want to get back on track and being a consistent trader, contact Pro Trader Strategies, and we'll try to work with you with some strategies or some coaching, something in that direction, okay? Thanks again. I'll take it back to you at Traders Talk Live, and hold on for the next speaker.